Welcome back to The Explainer. So today, we're diving straight into some seriously massive economic warnings that have been completely dominating the headlines recently. We're going to strip away all the political noise, right? And we're going to decode these claims using pure, hard data. If you've been wanting to know what's really happening beneath the surface of all these crazy headlines, you are in exactly the right place.
Okay, here's our roadmap for today. We're going to hit the economic tsunami warning, India's rising debt burden, currency traps and imports, the middle-class squeeze, a really mind-bending stock market paradox, and finally, exactly how you can survive all of it.
All right, let's jump right into Section 1, the Economic Tsunami Warning.
So on one hand, we're hearing this incredibly dire warning from the political opposition. They're literally predicting a massive economic tsunami, like an unprecedented crisis, unlike anything we've ever seen in our lifetimes. They're basically saying that it's going to lead to widespread distress and systemic revolt. It's an unbelievably heavy claim that suggests the whole system is just on the brink of losing control. But hold on a second. Contrast that doom and gloom with this projection from the ruling party, a super robust 7.7% GDP growth for the 2025 to 2026 financial year. They're pointing to incredibly strong economic momentum, an easier way of life, and just an overall thriving nation. So we've got a total economic tsunami on one side and booming historic growth on the other.
Now, this is where it gets super interesting. The Reserve Bank of India kind of just cuts right through all that political noise. They are projecting a much more grounded 6.6% growth for the following year. And why the drop? Well, it's largely due to unpredictable global shocks, like the Iran conflict, and very real domestic issues, like a weaker monsoon affecting our agriculture. It's pure pragmatic data.
Okay, moving on to Section 2, India's rising debt burden.
Let's trace the actual trajectory of our national debt, and honestly, it's a bit terrifying. Back in 2014, the debt stood at 55 lakh crore. Fast forward to 2023, it completely ballooned to 155 lakh crore, and projections for 2026 put it at an astounding 197 lakh crore. The line literally only goes up regardless of who is actually in charge.
Here is the absolutely crucial takeaway. This isn't any specific political party's debt. It's India's debt. And the burden of paying it back or facing a completely catastrophic bond market failure falls squarely on our shoulders as citizens. The state can really only service this colossal debt by relentlessly taxing us or by selling off national assets. That's just the reality of it.
Which brings us to Section 3, currency traps and imports. Now get a load of this massive anomaly. Because India imports roughly 88% of its oil, we are highly vulnerable globally. In February, we imported 150 million barrels of oil and paid about $9.82 billion. But then in April, we actually imported less oil, 143 million barrels. Yet our total cost absolutely skyrocketed to over $15.37 billion. We literally bought 7 million fewer barrels, but paid over $5.5 billion more for it. How is that even possible?
Well, that staggering difference is driven almost entirely by the depreciating rupee. Back in 2021, the rupee was sitting at around 74 to the US dollar. Recently, it has crept all the way up to that 95 mark. And when your currency loses value like that, your import bills just explode, trapping the entire nation in a massive currency deficit.
All right, Section 4, the middle-class tax squeeze. Let's see how this actually hits your wallet.
Consider this massive disparity for a second. Roughly 42% of the entire Indian workforce is employed in agriculture, right? And they contribute a solid 16% to the national GDP. But guess how much income tax is paid on agricultural earnings? Exactly 0%. That means a huge portion of the population legally contributes nothing to the income tax pool, which naturally shifts the entire national burden somewhere else.
And who exactly carries that burden? You guessed it, the middle class. Because the ultra-wealthy can just pack up and move to tax havens like Dubai, and the agricultural sector is untaxed, the government has to find revenue somewhere. And they find it through relentless taxes on your savings. They tax your fixed deposits, they slap a 3% GST and high duties on your gold, and they charge up to 12% stamp duty on your property. Add to that the cutting of essential subsidies and the massive global risks to our remittance inflows from the Gulf, and the squeeze on the everyday middle class becomes incredibly intense. Okay, Section 5, the stock market paradox. There actually is a silver lining here.
Common sense tells you that if an economy is failing, its stock market should crash, right? Well, actually, no. Let me share a little economic secret with you. Look at Egypt, where where the currency recently crashed to 3 times its previous exchange rate against the dollar. Or look at Pakistan, a country facing severe, systemic economic crises right now. In both of these nations, despite failing, struggling economies, their stock market indexes have absolutely exploded. We're talking growing up to 5 times in value.
Why does this happen? It's just a simple mathematical reality. As the buying power of a currency drops, the nominal price of tangible assets naturally skyrockets. It literally just takes more of a weaker currency to buy the exact same asset. So property, gold, and corporate equities naturally inflate on paper. Basically, an economic crisis often acts as pure rocket fuel for asset prices. Which finally leads us to Section 6, how to survive it. So, knowing all this, how do you actually navigate it? You've got to play both defense and offense. Defensively, avoid taking on bad consumer debt at all costs, prioritize job stability over a slightly higher paycheck somewhere risky, constantly be learning new skills, and seriously, build an emergency fund of at least 10% of your income. Offensively, never, ever pause your market investments like your SIPs during a crash. Because of that asset inflation paradox we just talked about, the stock market is quite literally your best hedge against a failing currency.
To wrap up this explainer, I want to leave you with something to really think about. We've talked a whole lot about national debt today. But do you know which Indian state currently holds the highest amount of individual debt? Take a look into it after this. The answer might really surprise you. Remember, as we face all these global economic headwinds, tough times don't last, but tough, informed people for sure do. Thanks so much for joining me on The Explainer today. Keep learning, and I'll see you next time.